In this video, guys, what we're going to look at is your trade hunting process. So some different ways that you might look for the very best trades to take. Stay tuned. Hey guys, warm welcome to you. All right, so you probably have a specific process for finding the very best trades. Now that could be technical, there could be some other ways. And what we're going to do is we're going to break down some of those ways now and also maybe come up with some ideas of other ways to find trades. Now, we want to become specialists in a specific methodology. There's no doubt about that. But often, we can combine a couple of different ways that help bring trading ideas into what we're specialists at. So if we're specialists at charting, maybe there's other ways of bringing trade ideas into your charting process. So we'll have a look at that as well. By the way, guys, before we continue, I want you to check out our channel sponsor. There's a link to them in the description below. Multi-regulated, offer the use of the MT4 platform, MT5. Major currency pairs. In fact, it's a super good range of currencies, commodities, indices, US stocks, even some crypto. So go and check them out. If you're looking for a new broker, perhaps your broker is not performing as well as it might be, or maybe you're new to trading, or you're looking for a backup broker, there's a link in the description below, like I said. All right, so let's have a look. Now, most people will be familiar with the first one, and that is top-down technical analysis. So the way we conduct top-down technical analysis, very briefly, is we look at the higher time frames for our broader pattern. Let's say we're looking for an uptrend on our daily, then we'll go down to a lower time frame like our hourly and go, yes, we're pulling back a little bit within a broader uptrend. Great. We might look at our 15-minute and find some support level to work off, and then we might use a 5-minute or a 1-minute if we're going right down to a day trading perspective to say, okay, I've seen a little wick on this, I've seen a little probe through support, whatever it may be. So you're basically using your technical analysis skills. You've got different segments of setups and strategies that you're employing with that. Bull flags, bear flags, double tops, double bottom, 10 and shoulders, etc. You know the score with those. And then you're going down the time frames to find a level to execute. That's a very good way of a very good process, should I say, of finding trades, because you're scanning through maybe markets that you like to watch specifically. You've got a basket of markets, or you're scanning for a specific setup that you're a specialist in on a wide selection of markets. And again, this process you can just repeat. Now, number 2 is a catalyst trigger. So this is something that you may not want to do it on its own, because I think that technicals are a very good way of kind of framing the trade and quantifying the risk and having targets. But you might want to bring trades in that have a catalyst trigger, like the Fed coming out and doing something. Perhaps you don't always trade gold, or perhaps you don't always trade the indices or the dollar or whatever it may be. But if the Fed's doing something unusual, that might trigger a significant move in that market, which then you might want to do some kind of technical analysis to adjust and decide. But it might not be your initial criteria as it is here with top down. So a catalyst trigger, Fed earnings if you're trading stocks, and you can trade stocks, got an account there. Any news potentially, so just broad news on something unique, like if there's a commodity that's some specific news that's choking off supply, then that might say, okay, well, there's a trade opportunity there. It's not a specific trade opportunity with a chart pattern per se, but there is a catalyst there which might trigger you to say, okay, I want to get involved in this on the long side, but I'm going to wait for this level pullback, etc., etc. So you might mix and match some of these things. Number 3 is specific price level. So similar to this, but you might be saying, okay, this market, I want to buy it at this level. I want to buy it at 101. I want to sell it as it breaks 101. So you've got a little bit of a flavor of this, but what you're doing is you're using that as the reason to look at the price, to look at the trade. So example might be, let's say you've been following Tesla or one of these stocks. Is it ripping to the upside, and technically maybe it doesn't fit your criteria. It's not quite the thing, but it's such an unusual move that you're like, okay, I want to wait until it gets back to this price and then I'll look to buy it. So it's bringing it into your analysis process purely because of a price level as opposed to a technical pattern, because a technical pattern can occur at multiple price levels. Maybe there was a catalyst that caused it, but you get the idea. Now, number 4, guys, is lots of retail involvement. So this is something like, for example, the crypto. So when Bitcoin went crazy, again, Yes, there may be some technical patterns that you want to kind of look at, but it brings it into your ecosystem, it brings it into your awareness, because purely there's a lot of retail involvement, there's a lot of interest in it. And that's the same with stocks. Tesla's a great example as well. Yeah, there was a lot of people involved in that, causing that to spike up. There's a bit of a catalyst as well, because a lot of short people stuck short on that trade. Catalyst as well for Bitcoin, of people who had never traded before started trading Bitcoin. So the point is, we often very blinkered and thinking, okay, I'm going to trade top down, I'm going to look for my charts, and there's nothing wrong with that. But this is just an idea that if you want to kind of be aware of other trades, there's nothing wrong with being alerted to something that's moving significantly, because that's where our edge is, guys. Significant movement is our edge. When people aren't sensitive to price, but they just want to get out or get in, like we have with Bitcoin, like we've seen with Tesla, like we've seen recently when I'm filming this with the down move in the markets, this kind of stuff, there's a catalyst. And then, there's some reason to bring it in, and you might not be trading it. Then you can conduct your technical analysis, you can put your risk management to it. Even though it might not be a specific pattern that you like, then you can at least look at it and go, right, this has been brought to my attention, I'm going to run through my process. My risk management is key. You can't put your risk management out the window with any of these. We still have to have the ability to quantify where we're going to come out if we're wrong, where we're going to come out if we're right, what's the reason for the trade. All this kind of stuff still needs to be done. But the point is, this is just another thing you can add, another string to your bow, another thing that you can scan for to bring the very best opportunities into your awareness, so that you can trade them if you feel they're offering a decent risk-reward ratio, decent probability of success, and all those other good things. All right, guys, go and check out the description below. Otherwise, take care, keep your risk managed. I'll see you in the next one. Bye-bye.